Right now, AI is replacing jobs faster than any recession could. It's also driving increased stock market volatility, and it's putting us in an economic landscape that we have never faced before, ever in history. And while most entrepreneurs and investors are still clinging to the old playbooks of building businesses and investing with the same antiquated stocks and mutual funds and ETFs and bonds, the smartest capital in the world, is moving more and more into hard assets, things like real estate and land and private credit and oil and gas. But why? Because they know the truth. You cannot diversify your way out of a correlated market. And when the next wave of AI disruption hits, paper wealth disappears in a second. But hard assets, they keep paying you. Today on the Exit, I'm going to show you exactly why building a financial fortress in the AI age starts with owning the things that AI can't replace or make more of. All right, welcome back to Own the Exit. This is the podcast where we help entrepreneurs and entrepreneur investors build businesses and portfolios that act as a financial fortress that can withstand anything and give you the freedom to live life on your terms. Now, on this show, we give insight into 4 key pillars of business and of wealth that help you to define your own exit so that you can own it. And every episode is designed to help you develop the right mindset and values to fuel your desired end game, to create systems that make your business smarter and more autonomous so that you can have options rather than being trapped inside a nicer cage that has your brand on it. We want to help you get your business prepared for somebody else to buy it if that's what you want, so you can cash in that windfall and make the right time come in less time. And from time to time, we champion the idea of taking a diverse approach to wealth building, investing cash flow from your business into uncorrelated assets that compound your wealth and protect your downside. So regardless of what the topic of the episode is, the aim of the show is holistically to help you define, achieve, and ultimately take ownership of your desired end game. Hence, own the exit. And today's topic is one I think that every smart investor and business owner needs to wrap their head around fast. And that's how the AI revolution is fundamentally reshaping business and wealth building. Why the old playbook no longer works in an AI economy, and why owning hard, productive assets may be your best shot at not just surviving the AI age, but thriving in it. Because here's the thing. If you're building your business and your portfolio using the same assumptions your business mentor or financial advisor gave you 10 years ago, heck, even 5 years ago, you're building on quicksand. So let's start with the landscape of what's actually happening. Here's some mind-wrecking stats for you. Goldman Sachs projects 300 million full-time jobs to be replaced by AI automation globally over the next 5 years. 2/3 of U.S. occupations will have at least 25 to 50% of their tasks fully automated by AI by the year 2030. Entire industries, finance, transportation, legal services, even healthcare are seeing white-collar roles get disrupted and replaced fast. And blue-collar roles in manufacturing, warehousing, and logistics, they're already being replaced. Over the last year alone, Amazon has deployed 750,000 AI robots in their warehouses. And these robots are 75% more efficient than their human counterparts. I was just reading last week about this new AI called Head AI. It was created by 2 teenagers in a basement. It launched in May of this year and is already replacing marketing roles at major companies. It can create and optimize paid ads, influencer campaigns, cold email outreach, and affiliate marketing campaigns at the click of a button, simply by analyzing your website and your company's core product or services. And you only pay it when it actually generates a new paying customer. Customizable GPTs can do legal research in minutes that used to require days or entire teams of junior attorneys and paralegals. Diagnostic medical doctors are already being replaced by more accurate and more efficient AI machines, and 450,000 medical support staff are being replaced by more accurate and more efficient AI counterparts. And here's what most people don't understand yet. We're moving into a world where you can have a booming stock market and a collapsing labor market at the same time. You no longer need a recession to lose your job. Technology can now do that job for you. And that's just one side of the coin. The other side of the coin is the public markets themselves. You know, the mutual funds that Dave Ramsey always said would make you rich, or the bond markets that were once a sure income play. They're all changing underneath our feet right now. AI isn't just writing code or taking call center jobs. It's driving algorithmic trading across stocks, bonds, REITs, commodities, you name it. And the same models that are displacing human workers are also increasing market correlations. Translation: when things go south, everything starts moving in the same direction fast. Diversification is nearly impossible to achieve inside public markets. And so the classic playbook of, well, I'll just make great income from my business and I'll invest it on, long term in a 60-40 portfolio and ride it out. That model is broken. It will not work. Now, here is where it gets really, really interesting. Let's zoom out for a second. After the global financial crisis of 2008, governments pumped stimulus and bailouts and quantitative easing. And then after COVID, the same thing, but even bigger. You remember all those stimulus checks? What did that do? Well, it saved asset prices and it saved jobs, but it also increased correlations across the board. Bonds and stocks, which historically moved opposite of each other, started moving in lockstep. Commodities started moving with equities in a risk-on, risk-off cycle. Now, that government intervention, of course, was justified with the promise that it would save jobs, and to some extent it did. But with AI, no amount of quantitative easing or stimulus from the government will stop structural job loss from automation. You can't paper over the fact that machines don't need stimulus checks. And yet the markets are still more correlated and more fragile than ever. And at the same time, AI is actually accelerating that fragility by driving more model convergence in trading, which overall increases systemic risk. And so here's plain speak. AI is replacing jobs by fueling business efficiency, meaning no amount of government stimulus or intervention can save those jobs. Simultaneously, as an example, AI algorithms are trading about 65% of all daily volume in equities and growing substantial amounts of all other public asset classes. And it's reading and reacting to all the same data and news. So now public markets are so correlated that they all move together, and AI exacerbates and accelerates that. That means you're not diversified in public markets. It's just an illusion. So we're staring down this paradox right now. More job risk than ever, more market fragility than ever, and a generation of entrepreneurs and investors who are still trying to play by the old rules. Which brings us to a question. How can I build my business and my personal financial fortress in the age of AI? Well, let's start with your business. If you're a founder, a CEO, a business owner, and you're listening today, you have to be thinking about how AI impacts your workforce, your competitive positioning, your value creation models. And here's the big idea. Don't fight the wave. Own the board. Meaning, if you stand a chance of being in business 3 to 5 years from now, then you have to leverage AI inside your business wherever possible. But use those gains to acquire assets outside the fragile public markets. Because here's the truth. You can make a fortune inside your business and still lose it if you park it all in correlated assets and the system starts to shake. This is why I personally believe in a very simple principle. Own the things that AI can't create more of, and own the things that AI can't devalue. And that means hard assets, things like private real estate, productive land, private credit funds backed by real assets, oil and gas interests and royalties, certain select commodities. And why? Because these assets, they produce real durable income. They have intrinsic value, not just perceived value, and they're low correlation to public markets, and they're not driven by AI trading algorithms. Think about it. In your business, AI can write better copy than you. AI can probably run parts of your business better than you, but AI can't build more land. It can't invent more oil. It can't make a Class A multifamily property in a top submarket suddenly worthless. In fact, AI can only enhance the value of that asset. Actually, let me tell you a quick story. I met a guy about 6 months ago. This dude's like a freaking AI genius. I'm going to get him on the show someday to talk about this, but he started and exited 9 tech companies, has made countless millions, and he's now backed by a $50 million VC investment to go out and implement first ever AI. First ever AI implementations, things that people have never done yet with AI. He's got $50 million of VC backing to take existing AI technology and implement it in ways that have never been implemented before. And the reason he initiated the conversation with me is because of a luxury Class A apartment development that we're building. He explained that he'd honed in a native AI smart sentiment model that could be housed offline within a house or an apartment building, meaning that it couldn't be hacked because it wasn't even online. And then smart cameras and microphones and sensors could be installed in that apartment that could, for example, scan your refrigerator and your pantry and generate recipes for you based on only the food that you actually have in your house. And you could even buy a Colina robot for like $5,000, and that robot could sync with that AI and literally cook those recipes for you. The AI smart home could analyze your conversations with your spouse, and using sentiment analysis, it could give you real-time feedback that would help you to listen better, to argue less, to forget fewer things that your wife asked you to do by automatically creating calendar events and reminders for things that you agreed to do. He was telling me you could even wear a small Bluetooth headset, and if you wanted it to, it could gently remind you via voice command to stop interrupting, or it could help analyze what your husband is truly saying, or help you ask your wife better questions. Now, I get it. My first reaction was the same as yours. That's freaking scary. That's creepy as heck. But it's also very real and very much happening, and the technology already exists to do it. And it won't be long before that type of technology is as common to us as the internet or overnight Prime delivery. Now, none of this is to say that you should abandon public markets entirely. But the point that I'm making is that AI can enhance an apartment building, but it cannot replace it. AI can enhance efficiencies, but it cannot replace hard assets. So what I'm encouraging you to do is rebalance your thinking, because the old model of jobs plus stocks plus bonds versus the new model of entrepreneurial income plus AI leverage plus diversified hard assets that throw off cash flow and compound over time. That's the financial fortress that stands in the AI age. So here's my challenge for you. Start thinking about your wealth, not in terms of paper returns, but in terms of productive, real world income streams. How much actual hard stuff with intrinsic value do you own in your portfolio? And ask yourself, if I lost my job or my business saw a temporary downturn, what assets would keep paying me anyway? And if you want to learn more about how we're helping investors do exactly that, then you can check out my primary company, oakiq.com, and the deals that we're bringing to market that are all backed by hard assets. Because here's the reality. You can't stop the AI wave, but you can build a boat that floats on it. And that boat is built with hard, productive assets. Thanks for listening to On the Exit. Hey, if you got value from this episode, want to ask you to leave a review, share it with a fellow entrepreneur or investor who needs to hear it. Until next time, own the exit.